Hey you guys, my name is Dee Edwards and I am the master trainer for the IRS tax schooling. I enjoy teaching tax professionals how to succeed in the tax industry by providing quality online courses that are relatable to the tax industry. So in today's video, I want to share with you 4 reasons why tax preparers are penalized by the IRS. If you work in the low income to moderate income wage community or with those type clients, you know there are certain credits that require us to go the extra mile, such as earned income tax credit, child tax credit, additional child tax credit, American Opportunity Tax Act credit, now other dependent credit, and the head of household status. Anytime that those credits, or at least one of those credits, are being filed on a tax return, you as a well-informed and knowledgeable tax preparer must exercise due diligence. So one of the reasons that tax preparers end up being penalized for not performing or exercising due diligence is improper interview techniques. Oftentimes, tax professionals, they are too scared, they're too afraid to ask important questions. When you are properly interviewing clients, especially those who have those credits that I mentioned before, then you have to dig a little bit deeper. You have to ask questions like, who all lived in a household with you? How long did your dependents live in the household with you? Did anyone else contribute to your household support? Do you receive Section 8? Do you receive food stamps? Do you receive welfare? Do you receive child support? Like, all of these questions are imperative to you asking, because the IRS hold you accountable to interviewing your client and asking sufficient questions and documenting those questions and answers. So if you want to perform due diligence properly, be sure that you interview your client and ask questions. The second reason is that oftentimes tax preparers do not keep records for a sufficient amount of time. So if a client brings in any documents that you use to help to determine whether or not they qualify for certain credits, you're supposed to keep those records for at least 3 years. And I find that a lot of times tax preparers, they will actually maybe look at the documents but give them back to them, or they don't make a copy for their records. So if your files are ever audited, the IRS, if they ask to review these records, you may not have them. So I love to tell tax professionals, make sure that you just keep a copy of whatever the tax client brings to the office. Keep a copy of it. And according to the IRS, you can keep an electronic copy or you can keep a paper copy. The third reason that tax preparers are penalized is a lack of knowledge when it comes to the tax laws. According to the IRS, you are supposed to thoroughly understand earned income tax credit, additional child tax credit, American Opportunity Tax credit, other dependent credit, and head of household status. You need to understand the laws as it regards these credits, especially if you work with those clients. Saying I don't know or I wasn't aware of that is not sufficient for the IRS, and it's one of the reasons why tax preparers are getting fined, because they're saying that they don't know. That's not a reason as to why you improperly filed a tax return. So just make sure that you thoroughly understand the tax laws. And then the last reason that a lot of tax preparers get in trouble or are penalized is because they don't have sufficient information in order to claim certain credits. Let's say, for instance, if your client wants to claim the American Opportunity Tax Act credit. First of all, as a well-informed tax preparer, just because they want to claim a credit doesn't mean that they qualify to claim a credit. So I would ask you, what information do you obtain from your client to make sure that they can qualify for this credit? one of the things that you should get, and it should be mandatory, is a 1098-T form. A 1098-T form. And in our office, and what I like to teach tax preparers, because of the tax laws and the changes, if your client does not have a 1098-T form, then don't add the credit. Okay, and so when it comes to using the credits or applying these credits to the tax return, just make sure that you have sufficient information and make sure that it is accurate and is correct, is true to the best of your knowledge. You cannot have known that the information is incorrect, and just because the tax client wants you to file it, then you file it anyway. No, that's not how it works. No, 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 no. If the files are audited and you are to get in trouble, you must realize that you have to take a position when it comes to filing tax returns. If you file a tax return that is inaccurate, incorrect, or inconsistent with the information that should have been provided, then you have taken an unreasonable position on that tax return. You, as the paid tax preparer, you do have the right to deny filing a tax return that you don't feel comfortable with, or requesting that the client bring in additional information, because it's not just about your client, it's about protecting your brand and protecting your name as a tax professional. Well, my name is Dee Edwards. Again, I am the master trainer for the IRS tax schooling. We are open for enrollment for those of you all who are entering into the tax industry, or if you never have taken a tax course before. We go into details to help you just enter into the tax industry as a well-informed tax preparer. To learn more about our courses, visit www.irstaxschooling.com. And for those of you all who are tax business owners, or you've been in the industry for a while and you need a refresher course, what we do is teach the main information, such as the new tax laws that affect low to moderate income wage earners. We also teach Schedule C's, due diligence, record reconstructions, just the requirements for all of these credits that I mentioned during this recording. So if you want to learn more about our course, be sure to visit www.irstaxschooling.com. I look forward to working with you. Have a great day. Bye. Toodles.